Welcome to Livewire's The Pitch. I'm Hans Lee. And have you ever thought of broadening your horizons beyond just Australia as an investor? Well, today you get to pack your passport and have your investing account ready to go because we're going global with Chris Smith of Intermediate Investment Partners. Chris, great to have you. Welcome.
Yeah, thank you.
So let's start with where you're from. North America, New York especially. I find it interesting. It makes up 67% of your portfolio. The MSCI, the MSCI All Countries World Index has about 63% US companies. So I wanted to start with that before we go to the rest of the world. What are your risk parameters and how far are you allowed to actually deviate from your benchmark?
So we have an ability to go outside of the benchmark range, so we can go plus or minus 10% with regards to the US weighting.
And the reason that there's more in the US is that just generally where the opportunities are, you think, at this particular point in time?
Yes, that is where we see the most opportunities, where companies are growing at the kind of rates that we're looking for and the returns are at the level we're looking for. So I would say if you went back 10 years, we would not have anticipated the market would become even more concentrated.
I was going to say 10 years ago, were you 60% of the US
Yeah,
as well?
no, we were not. We were more like 50%, and we would have thought that would trend lower over time as certain other economies became a more important part of the global economy. But it's gone a different direction than that, and technology is a big part of the explanation. All
right. Well, we'll leave North America. We'll hop across the Atlantic. We'll talk about Europe and some of the other geographies represented in the other 33% of the fund. As I say, their second largest region is Europe. What specific opportunities are you finding there?
We do have a position in Inditex, which is the owner of Zara, so the fast fashion leader. Right. So they continue to generate very strong sales growth globally. So they're actually becoming quite big in the US after not having a lot of presence. They've done a very good job with the omni-channel efforts, e-commerce and physical, combining them over the last number of years, and we see a lot of opportunity for them to keep performing well. Universal Music Group, UMG, is the largest record company or music company out there. It's a business that has gone through tremendous change over the past couple of decades, but we're now at a point where pretty much all the revenue comes from streaming. We're seeing some pretty good pricing coming through on the streaming side of things, and they have the biggest catalog, they have the most market power vis-a-vis the streamers. So we see nice growth for them going ahead. And also, I think streaming music and music in general is something where the back catalog has a lot of value. Like it's something where people listen to what they know from when they were younger or when their parents were younger. And it continues to generate revenue, so it's a great thing to own long term.
Yeah, no, absolutely. All right, a little bit of fashion, a little bit of music. Let's hop across east geographically. And if we can, we'll talk about emerging markets. It's a huge universe, right? And every time we talk about emerging markets, we say no two emerging markets are alike. But it's also true that it's often generalized as underpriced, overlooked. Where do you find opportunities within that broad universe?
Yeah, so there are a number of companies we have in the portfolio. So in the semiconductor space, we have TSMC, the Taiwan Semiconductor, the company that makes most of the highest end chips, whether they're for NVIDIA or for other companies. We have Samsung, which is a leader in memory, which is listed in Korea. We have HDFC, which is a leading mortgage firm in India, a company where mortgage penetration is very low, but yet people are, they have the level of income needed to support a mortgage, so seeing good growth there. So we find a lot of attractive opportunities within emerging markets. We look at them in the same way, through the same filters as any other company. And yeah, some of them do come through and look quite attractive to us, but it is a big area to follow, as you pointed out.
Yeah, well, you mentioned Taiwan, you mentioned India, you actually even mentioned South Korea. There is one other emerging market which lots of people like to talk about and lots of people have questions about specifically right now, and that's China. Does your emerging markets exposure include China? Has it had it in the past? And even if it doesn't, do you see a future where it could theoretically include Chinese stocks?
Yes, so we definitely include China. We spend a lot of time looking at Chinese companies. We have had Chinese companies in the portfolio in the past. The environment, regulatory-wise, within China has changed quite a lot, impacting our view on some of the consumer technology companies like an Alibaba or a Tencent that we historically would have had in the portfolio. The overall economic environment has also changed recently, where demographics are not as positive. Consumer budgets are under pressure. There's less spending on more premium products that have been occurring for quite a while. So a lot of the consumer names are of less interest to us also. So it's an area that we follow. Valuations are very low. We do think we will have names in China in the portfolio again at some point, but not at this moment is where we currently come out.
And then we'll hop across to Japan, where there's been such a resurgence. Warren Buffett buys stakes in 5 trading houses and all of a sudden everybody is in Japan. The Nikkei 225 hitting a fresh all-time high after more than 30 years. How do you think about Japan? Have you got a high conviction holding in that particular market?
Yeah, we have a couple of holdings in that market now. So Keyence, which is involved in factory automation, is a key holding going back many years. We have another company called Shinetsu. They make silicon wafers, which go into making semiconductors. We think both of those are great businesses. They're both leaders in their areas, generating high returns. We have had some other names in the portfolio, but with the recent move in valuations have sold out of them. So Tokyo Electron being a key one, where it's trading far above its historical valuation range. So it's a bit of a mix. We would like to have more exposure to Japan. It's hard for us to find the kind of companies that grow at the rates we're looking for and that are focused, high-quality businesses. So that's where we struggle, I would say.
Chris, this has been really fascinating. We really have gone all around the world. Thanks very much for joining us from Intimate.
Thank you.
And thank you for joining us. We hope we'll see you next time for another episode of The Pitch. If you enjoyed that, you can subscribe to our YouTube channel, as well as to the Livewire and Market Index websites. See you next time.